Good afternoon and welcome to the ADEPT Technology Group PLC final results investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time by the Q&A tab situated on the right-hand corner of your screen. Just simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where it is appropriate to do so. Before we begin, I'd like to submit the following poll. I'd now like to hand you over to Ian Fishwick, Chairman. Good afternoon to you, sir.
Good afternoon. Good afternoon, everybody. So my name is Ian Fishwick. I'm the founder and I'm the chairman of ADEPT. I thought I'd start this with the kind of news at 10 headlines, and then I'll pass across to Phil Race, and we'll kind of do a bit more detail in it. So thanks for listening. This has been a really interesting year for all sorts of reasons, but one of them, we've taken on some phenomenal customers in the last year. People like Rolls-Royce Motors, Atomic Weapons Establishment, Public Health England, who we've all heard lots about, Nottingham City Council, Surrey Council Hospitals. And the reason why I'm telling you that is when you're playing at that level, then you got to be fairly good at what you do, to be fair. And this year, obviously, every year changes slightly in technology. We've been focusing really hard on secure networks because obviously a lot of people are working from home now. And the current latest technology, right at the very forefront of that kind of thing, is a thing called SASE. S-A-S-E, Service Access Secure Edge. Not surprisingly, perhaps, the people who develop things like that are in the States, and our American partner, Cato, did us the honour of naming us as EMEA, that's Europe, Middle East and Africa, Partner of the Year. So it's not just a case that we're now providing services to some really interesting big customers. One of the biggest security vendors in the world have named us as the best in Europe at what we do, which is great. And the other bit, by the way, that I thought was lovely for the staff, because they're the ones who do all the work at the end of the day, was a jury of our very senior peers voted us as the Managed Service Provider of the Year. Now, you probably spot from my age, I grew up with the late, great Lord Weinstock at GC Marconi. I was absolutely drummed through me like a stick of rock that cash is king, cash is king. There's no point running a business unless it makes cash. And that's been one of the really big features of ADEPT for the best part of 20 years now. And it's been nice to see that, you know, if ever there's a way of stress testing a business, then a pandemic with lots of lockdowns is exactly that. And yet we still generated, even after restructuring, over 8 million cash in a year. And before restructuring costs, over 10 million. Right, so that's incredibly encouraging to do that. And it's been interesting this morning to see that the analyst report that came out, because of that free cash flow yield, said that, you know, the target share price is 350p. Now, I only tell you that, I don't know if it's right or not, but the point is, we're sat here at 145. So the analyst view of where we should be is a million miles from where it actually is. So that's why I commend to you the rest of the detail, and I'm going to pass across to Phil to take us through what's going on properly. Okay, all right, Phil.
Thank you very much, Ian. So yes, apologies from John. He couldn't be here today. He's got COVID, so that's the reason I've drafted in our chairman. So thank you very much, Ian, for participating. So right at the top, what are the four key messages that I want you to take away from this presentation? So quite simply, we're a class-leading provider of managed services, and that's not just me saying that. We've won awards, and we've been recognised by our partners as being leading in our field. So that's a key takeaway. We have approaching 75% of our revenues as recurring revenues, with profitability at a very consistent 70% of underlying EBITDA. So in terms of the financial foundations for the business, both now and looking forward into the future, we have this very strong foundation that we build upon. As Ian mentioned, we have phenomenal free cash flow, over 100% reported in this period, and consistently over many years, over 80%, and our capex is less than 2%. So we generate substantial free cash flow. And the last thing I want to stress is we operate in a large market. The UK market that we focus on is valued at north of £11 billion, and it's growing at upwards of 5% per annum. So we're in a large market that is growing, and we have very strong customer credentials. So 4 reasons why I would argue you should listen to this presentation. Okay, moving on. So a little bit about ADEPT for those who don't know us. So we've been building a broad capability so we can address the needs of our customers, and we've focused on specific families in terms of our grouping. So whether that's cyber security, obviously a lot of our customers are getting attacked from bad actors, and we're able to provide the tools and techniques and the assessments to protect our customers from that. We provide a public cloud capability, so we can help people move to the cloud, which is an off-premise use of technology. We provide managed IT services, and within that, business continuity. We have a range of experts within our business that can provide professional services. We empower organizations to connect to their customers and suppliers using cloud-hosted voice services, as well as the more traditional on-premise voice services. And we manage networks and provide Wi-Fi. As an example of many schools, we provide Wi-Fi capability in schools, and none of those schools are easy, often in old buildings and very large campuses. So that's the range of services that we're now able to bring to our customers through a team of over 340 experts in this space. But let me take that one step further. So we have this range of capability, but what benefits does that bring to our customers? And so when we're having conversations with customers, we don't talk about the tools that we have, the things we have in our kit bag. We're talking about the challenges they face and how we can address those challenges, and the sorts of challenges that our customers are looking to address. And I include schools and hospitals and doctor surgeries and care homes amongst that customer community. What they're looking for is they want to be resilient. So if their technology, they want their technology to operate, just work. They want to be agile. We live in a fast-paced, changing marketplace. So organizations are looking for seamless workflow and business insights so they can adapt to market demand. They obviously want to be successful, but through that they want to engage rapidly with their customers. They want to engage in a seamless way through multiple channels, and want to engage digitally. So you'll hear in this marketplace digital transformation, and what that often means is how organizations engage with their marketplaces in a digital way. Being unified, so we've been on that journey ourselves in terms of removing duplication and joining up the business, and a lot of companies are going on that same journey. So helping them integrate systems, remove duplication, refresh old technologies, and taking customers on that journey. And then being secure. So we talked before, there are many ways now to protect an organization from bad actors, whether that's the network security that Ian talked about earlier, but user security, security assurance. So that is a very hot topic, very fast-growing part of the marketplace. And finally, being a great employer. So organizations are looking to provide a modern workplace for their employees using technology for both in-office and at home. So being able to provide those type of solutions through great technology is another area that we address. So if you think about us, the broad range of expertise and items in our kit bag, but these are the benefits that we are delivering for our customers, and this is what's driving our growth in the marketplace. So taking that a step further, looking at our customers, and I'm incredibly proud of the range of customers that we service and the depth of engagement with those customers. And I almost sort of want to leave this slide up there and let you as an audience look at this. But let me pull out some great names. The Atomic Weapons Establishment. Well, we must be doing something good if we're servicing them. The TUC I'll come on to later. Sabre, the insurance company. London Borough of Greenwich, we provide a telephony solution to the London Borough of Greenwich. We're doing IT transformation across a number of customers. We we actually have a telephony solution in the centre of government. Much as I would love to be able to listen to what they're saying, sadly I can't tap into that. So a great range of brands and customers, and also very proud of the awards that we've been given over the last 12 months, which recognise the great work of the team. So I'll move on from that, but hopefully that gives you a sense of the breadth and depth of our customer engagement. So bringing this to life, because I think we can talk about all of those organisations, but let me just dig into one that I'm very proud of, the TUC. Now don't shoot me down. Some people might not like unions, but nonetheless, this organisation provides an important service. So their mission was to streamline their ICT infrastructure, reduce costs, reduce inefficiencies, simplify their supplier landscape, improve their IT world. So a very broad mission. And we started this journey with principally a full managed service solution. So we provide technology support to the individuals working within that company. But over time, we've expanded the range of services we're providing to the TUC to cover a whole range of capability. We're helping protect them using the tooling such as Windows Defender to protect their IT estate. We're delivering unified communication so they can talk to each other using Microsoft Teams, one of the leading UC solutions. We're looking after their applications within our hosted platform that we call Nebula. So we're looking after their intellectual assets. We've provided advice and guidance in terms of project managing the transition. We've designed new services. We've migrated them from their old technology to our new solutions and done that in a seamless way. We look after their network. So they've got a number of sites across the UK, and we've provided that seamless underlying network to join up their entire business. We've empowered their flexible working. So we've helped the TUC look after their workforce. Some of their workforce are remote, some of them are working from home, some of them are working in office, and we've provided the tooling to help them work in that hybrid way. And we've deployed a full Microsoft solution so that they have a rich application set on their desktop. So hopefully you can see from the TUC, it sort of brings to life how we're bringing that broad range of capability to organisations. And I think our big mission is to take all of our customers on this journey. At the moment, if you look at the collection of families here, there are about 7 different product families that we've taken to the TUC. Our average penetration is now about 2 product families per customer. And obviously our objective and our opportunity is to take all 7 to all of our customers. And there lies a lot of white space that we can attack as a business. Okay, so hopefully that's given you a sense as to what we do as a company. So let's dig into the numbers that we've announced in our RNS today. I guess we're very encouraged by this set of figures. Our revenue has grown by 18% during the course of the year to 68 million. Our EBITDA is now 11.9 million, and really interesting to see those 2 numbers. It shows that when we acquire, we can drive out synergies, and as a result of that, you can see we've actually increased EBITDA ahead of how much we've increased revenue. So we've been very cost conscious and really taken some of that cost out of the business as a result of combining Datrix to ADEPT, and we'll come on to Datrix in a little bit. In terms of earnings per share, again, you can see that very encouraging growth in earnings per share, again ahead of revenue growth, and our gross profit rising in line with revenue growth or broadly. Probably the important story that we constantly encourage investors to focus on is that cash generation piece that Ian mentioned. I think we're very encouraged. Pre-restructuring, our cash generation is north of 10 million, but the cash generation within post restructuring is 8.1. So we generate a very substantial amount of free cash, and we're very proud of that. It's a really important part of the DNA of the business. Yes, our net debt increased, but don't forget we paid the initial consideration for the Datrix acquisition out of funds in the period. We have a 4 million further payment to make within this financial year, and that then removes all exceptional items in terms of acquisitions. And CapEx is a key focus of ours. We constantly look to manage CapEx at less than 2% of revenues, and we've held to that KPI. Many people ask me, what's the best number that we're sharing in this deck? And I think the best number here is the organic growth in the cloud-centric strategic services part of our business. It's absolutely crucial as an organisation that you achieve organic growth. It's one of our key pillars going forward. But probably the number I'm most proud of is that 7% organic growth in cloud-centric services. And you can see it's now up to approaching 30 million of our 68 million of revenue. So it's a very substantial part of our business. Part of that organic growth was achieved by winning new customers. And again, it shows that we're able to sell into new clients our key propositions. Securing over 100 new clients in the course of the period is something that we should be very proud of. And some of those customers are using our in-house developed hybrid cloud platform we call Nebula, with 654 customers now using that service. And a really important dynamic in there is the cloud telephony piece. So yes, we have an element of our business which is the sort of calls and lines business. It's now only 13% of our revenues, but it's really important to stress that we've managed to switch sell some of those customers into new cloud telephony solutions, and some of that is seen in that Nebula piece. A 49% rise in our cloud telephony is very encouraging evidence that we can cross and upsell customers to new solutions. So I talked about that mix. So 87% of our business is now in that managed service piece, i.e. non-traditional telephony. Only 13% is now in that traditional telephony part of the market. Our support services have continued to be resilient, with an increase of 5.3 million in the course of the year. I've talked about strong recurring revenues, very stable at 74%. Very effective cash generation. We've paid down 5.5 million of our loan facility, and probably the second best number in this deck. It might be a modest indication, but it shows how we're confident about the future of the business with the reintroduction of a dividend in this announcement. So hopefully that's encouraging to investors on this call. I mentioned Datrix, worth sharing the highlights here. So we acquired Datrix back in April of last year. We announced at the time it was a game-changing acquisition. It brought substantial customers to the table and a new set of technology propositions and key partners. And we're delighted with the performance of Datrix as demonstrated by the earn-out we'll be paying this year. It shows that they've achieved a huge amount during the course of the last 12 months.
Can you just pick up one of the questions in the Q&A from Scott is, there's £2 million of restructuring costs this year. The reason why we did that is ahead of plan. Datrix was integrated in 3 months. That's astonishing to integrate a major technology company in 3 months. Now, this next financial year, we were planning on moving from 5 divisions down to 2, but we did this so quickly, we pulled it forward. So we're now down to, we've just got 2 management teams, right? And we'll keep reassessing that, right? So fantastic that we were able to pull that kind of thing forward.
So yes, it was. There were further restructurings in the second half, but that's a good thing because we're strengthening the business and reducing costs for the long term. So a little bit on strategy, and obviously this is very much the headlines. There's a lot of work underneath this, but the key thing is to mention the mega trends in the marketplace. Obviously, our mission as a management team is to steer our business into those fast-moving waters where there's healthy growth and substantial demand, and that substantial demand is driven by some of the mega trends on this slide. And I don't apologise for repeating what I shared the last time I presented on Investor Meets. We have a continual demand to improve the technology capability of the entire UK. Good example, we had a meeting yesterday, and the Department for Education have injected 140 million of subsidy into schools to encourage schools to implement updated Wi-Fi. And that just reflects the sort of nature of the world we live in, where technology is pivotal to how we live and breathe and how we educate our children. So a very good example, and obviously we can capitalise on that because we're very strong in the schools arena. Working from home, this whole point about hybrid working and supporting that. And people might think, well, of course, that opportunity's been and gone. Absolutely not. A lot of people put in tactical, short-term solutions and are looking to put in more robust and higher quality solutions to address that need. Technology as a service, there's a big theme in the marketplace where people are moving equipment from on-premise and providing services to their employees now through the internet and cloud capability. So that's again a big theme. Obviously, we work in the communication space, and BT are switching off that copper network. If you haven't seen that, then look out for that. It will affect you personally at home because people will switch off that telephony service into your home. But that's an opportunity as well. So people and companies moving off that BT network, then we can take them on a journey to cloud telephony. And the final one here is cybersecurity. It's an arms race, if you like, in terms of the bad actors and how they're looking to penetrate and steal information and hold companies to ransom. So providing a whole range of protections, both at the network and at the endpoints, being able to address that is an opportunity for us. So these are mega trends that continue to impact our marketplace, and that's why we're focusing on that solution set we talked about earlier. Digging into that a little bit more, our strategic priorities. I like to keep things simple internally within our business as well as when we're explaining our company to others. Our focus for the coming period is very much on organic growth. We have great supplier partnerships. We have great customer references. We have 340 highly skilled people. We have the ability to capture the vast majority of customer spend. So as a result of that, we're going to focus on organic growth for the foreseeable future and for a period, not look at acquisitions. Structure for success. We talked about the ability to absorb new acquisitions and operate them effectively. We have practically completed our One ADEPT program. We called it Project Fusion. We have a streamlined organisation. We'll always be refining and polishing that organisation, but we have a very clear and driven and focused structure within the business now. And given that, obviously reducing gearing. We retain our focus on being CapEx light. We retain our focus on cash generation. We will continue to pay down that debt over the near term to reduce gearing, which we don't believe is uncomfortably high anyway, but nonetheless, reducing that is a very logical thing for us to do. So they're the three pillars of our strategy, and we're driving the business against those objectives. I just thought I'd share a little bit under the covers in terms of some of the areas we are we're driving. So leading with consulting, I think it's a really important part of what we do. So trying to engage with our customers, but through short, sharp studies that then unearth opportunities. So system MOTs, cloud readiness assessments, security risk assessments. These are short, sharp, focused studies. A bit like taking your car into a garage. You'll have an MOT, and all of a sudden you'll end up replacing your exhaust and fitting new tyres as a result of the MOT. We're doing that in the IT space. It might trivialise it, but it's actually really important to very rapidly engage with customers and address their needs. We're very much capitalising on Microsoft. Microsoft are a big player in the mid-market space where we focus. And we have a range of expertise in that space now. We for example, run and host one of the largest Office 365 estates in Europe. So we have a lot of experience there. We've done over 1,000 migrations of companies and schools from legacy to the cloud. So we really understand this space, and we're going to do more of that. We've talked about data and working in that space of networking. That's one of the reasons we acquired Datrix. Integrating security into everything that we do. We've got some, again, excellent case studies, great partnerships. We understand this space. We're going to focus on that. Probably worth dwelling a little bit on extending to ERP. We have a capability now to deliver projects in a solution called Sage, which is a financial management system. Indeed, we use that ourselves, so we're very well versed in what it does. And there's a whole raft of organizations out there on legacy Sage platforms that are looking to move that to the cloud. So we've developed an expertise in that, and we're winning projects to deliver Sage solutions in the marketplace alongside Microsoft's Business Central. And focusing on partners. We don't exist unless we've got fantastic partners helping us deliver solutions. We have great partnerships, as we mentioned earlier. The likes of Cato have given us commendations. So making sure we continue to focus on those partners and work with them effectively is obviously key to what we do. So that hopefully gives you a little bit more colour in terms of how we run the business and what we do sort of beneath the headlines. Okay, so I'll hand over to Ian, not John, but hopefully Ian will do as good a job as our friend John. So over to you, Ian.
The CFO's got COVID, so you've now got me. We tend to look at this business in 4 revenue streams. And I've run tech businesses now for over 3 decades, and the one bit that never changes is you'll always have some heritage products, and you keep that as small as possible. Our calls and lines now is only 13% of what we do. Then you get kind of mainstream stuff that you do every day, and that's our support services, and that's a whole range of IT support and telecom support contracts. And then you've got your exciting new stuff, which shows it is the cloud-centric services. And then in this kind of world, you're inevitably going to sell boxes and software licenses, because that's part of what happens. Okay, right. So those are the 4 categories that we look things into, right? So in terms of, my God, these screens are getting smaller as I get older. I'm absolutely convinced now, right? One of the bits that kind of works for me in this kind of environment is there's no single customer concentration, right? Our top 10 customers are 28% of what we do, right? And there's no major attrition in any of the big ones at all, right? So let me just flip through to the one that I really want to talk about. Okay. If you look right down to the bottom right there, there's a little graphic that goes 2.4 times 2.5, 2.4, 2.6, 2.5. What's that all about? Well, the actual debt number that we have has never been the relevant number to me, because it's a bit like some people have got bigger mortgages than other people, because it's all about your salary multiple in terms of mortgage. It's the same here. One of the things that we've managed to do in this last year, which is pretty impressive, I think, is we've bought a business. We've clearly made it immediately earnings enhancing, because earnings per share has gone up 23%. But in terms of debt, you can see we've actually brought the ratio down. It's gone from 2.6 times to 2.5. That's a phenomenal achievement, and that's absolutely a stonking acquisition. And because we've pulled synergies out very quickly, we've probably paid, without doing the full commercial secrets, 2/3 of the price that we can see some of our competitors paying. Yes, there's another final payment of just like 4.2 million, but after that, we're then very much in the process of just taking that debt down. And part of the reason why it goes down quite quickly is all of the operating profit turns into cash, and then our capital expenditure is actually never been more than 2% of what we do. So it's structured to be a cash machine. Okay, so we're going to take that 2.5 times EBITDA net debt down to under 2 as quickly as we can.
So obviously we've shared the RNS, so by all means download that for the detail in terms of the financials. We can't ignore ESG. I suspect, given various macroeconomic factors, maybe this is not as high up on people's radars. But for us as a business, it's really important that we look after our workforce, we govern our organisation in a professional and diligent way, and equally we look after the environment for our children. So I wanted to give just a very brief update on that. Actually, we're just completing a cross-company measurement activity. So looking at parcels coming in, weight of parcels, parcels going out, weight of parcels, how our staff travel to work, the energy we use as a business, to give us a full carbon footprint baseline against which we can measure our improvements. And this is, if you read all of the articles, this is a crucial sort of first step on the journey to net zero. And we've made a pledge to get to net zero by 2030, and we can do that in so many different ways, whether that's reducing our energy footprint, using green energy providers, even exploring the idea of putting solar panels on a data center roof. So a whole range of different areas. So we're focused on this. It's an important part of our DNA. We also, worth mentioning as part of ESG, we're obliged to publish a gender pay gap report. We've undertaken our second gender pay gap report, which shows modest improvement. There's still a lot of work to do in that area as we evolve the business. And looking after our staff, we undertake an employee engagement survey on a regular basis. Our last survey was very encouraging, with a score of 85% net promoter. So we'll be conducting that again in the autumn of this year and share the results with you as investors. So it's an area we focus on. We've got a clear set of measures. We publish a plan that you're quite happy to read. We put that on our investor website, and it's something that's part of our DNA as a business.
Just one aside, we're absolutely committed to being a good corporate citizen, right? And for those of you who are interested in the net zero type thing, I mean, I had the honour of being asked to be by the Cabinet Office, the industry chair, to have a look at the impact on industry of going down this route. And ADEPT technology is actively one of the case studies being used by the Cabinet Office to understand how easy or difficult is this to do for industry. So we're very happy to help people and things like that.
Mm-hmm. Absolutely. Okay, so to summarise the presentation, hopefully you found this useful. We'll answer some questions. We've seen some coming through on the feed. So by all means, drop some questions into that. We're happy to answer those that we can. We'll do that in a very open way. So, to summarise, we have a robust business model, 73% recurring revenue, positive uptick in an order pipeline, both in Q4 and coming into Q1, particularly in the recurring space, which is very encouraging. We're able to capture significant share of wallet because of the broad portfolio we have and the new capability brought on as a result of the Datrix acquisition. We're building on that existing capability in terms of security, Microsoft and ERP with the Sage partnership. So we don't necessarily have to buy that skills base. We can recruit, and we're constantly recruiting as a company. We're in a marketplace which will always be changing. The technology world, in my 30 years of working in this space, has always changed and adapted, and it's just really important that as a company we are agile and flexible and identify where those areas of opportunity are, and that's something we do as a business. People will be key in FY23. It's really important that we look after our staff. We're launching a flexible benefits program for our staff in September, October of this year. We're enhancing our training. We're updating our offices. So we are focusing on looking after our people. And we can't ignore, supply chain remains a frustration for us as a business. It's been mentioned on the Q&A. We think that's affecting £300,000 to £400,000 worth of margin that we can't get to, which is, and that's not going to wash away this year. I think we're still going to have that frustration for the foreseeable future as the conflict in between Russia and Ukraine still impacts us, and also shutdowns in China. So you're still going to have those challenges. We recognise that.
Let's just do apprentices for a second. I mean, one of the questions we've been getting throughout the day is, how's inflation impacting on staff salaries and things. We used to have a couple of apprentices. This year we've got 10. So we're very much pushing grow your own skill sets.
Absolutely, yes. But finally, I think the key message that I want to take away is that we're in an attractive market that is growing. We have strong capability. We have a robust business model. We have strong foundations and a very clear strategy. We're focusing on organic. We have a clear and organised organisation, and our focus on paying down debt makes huge sense in this current climate. So they're the takeaways that we'd like to leave you with.
Phil, Ian, thank you very much for your presentation. Ladies and gentlemen, please do continue to submit your questions just using the Q&A tab situated in the right-hand corner of your screen. But just while Phil and Ian take a few moments to review those questions submitted today, I'd like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard.
So let's just pick some of these questions then. So not in any order of priority, but hopefully we can answer them. So hopefully I've answered the point about, I've got a question about the impact of supply chain challenges on the business. I think we've covered that.
Let me take this next one.
Next one.
Okay.
So read the question now because it's not visible.
Okay, so why was paying a token dividend considered more important than reducing debt? What are your expectations regarding debt at the end of this year? Okay, so the first bit is, we were a dividend paying company. We paused for 3 years through the pandemic, and we've announced a 1p dividend today for several reasons. First bit is, we increased earnings per share by a whopping 23%. It's now 27.5p. So announcing a 1p dividend isn't a great stretch. However, it is a real signal of confidence to the market, because obviously we wouldn't start dividends again unless we think it's sustainable going forward. And in terms of how does that impact on debt? Well, put it in context, 1p is about £250,000. Well, when you're generating over 10 million pre-restructuring costs, it's not really going to change the trajectory. Okay, so we're trying to send a message to say our primary aim is to get debt down, but we also understand that some of our investors want income, and they also, more importantly, want to see that we've got confidence in the future. We have, basically.
Thank you, Ian. Good question. What numbers are you not so proud of? I love the negative one of that. I guess you always want more growth. You always want to pay down more debt, and you always want more organic growth. And I think obviously, if I wasn't hampered by supply chain challenges, I think our organic growth would have been far more encouraging. I think that's the most frustrating thing about these results, is I think that we are hampered by some headwinds which are dampening some of the upside, and it would be great to talk about top line organic growth. And sadly, supply chain has arrested that to some extent.
Yeah, I mean, we can't forget that this was a year of lockdowns and most of them were unexpected. It was a bit stop-start.
Okay, our next question is ADEPT exposed to potential interest rate changes and thus increased costs in the near future? Well, Ian, do you want to answer that?
Yeah, I mean, the simple answer is if the interest rates go up, it costs you more. Let's not pretend it doesn't. But let's do context again. Every time it goes up 1%, it costs us about 300,000 a year. Okay, so again, it's interesting, but not that interesting. If you ask me, you know, is that one of the top 10 things we talk about in management meetings? No. And
I think the good thing is because we're not stretching ourselves in terms of our debt, in terms of maxing out the facility, then we're not at the higher bands of the cost of debt. Our finance director negotiated good terms with our two banks.
Next one, same gentleman.
I think I've covered that one, Ian. Right, so next one, your business is highly technical. How are you coping with wage inflation to retain and recruit talented staff? So I've got two answers to this. So one is really important, well, actually more than two. One is really important to retain your staff. So hence our point about flexible benefits, being a great employer. I'm taking the management team off for an offsite next week to help develop and train them. So that investment in training, because all of that sort of plays to being a great employer. So that's key. Secondly, we've talked about recruiting people at the start of their careers. We've had some great successes with that. For example, in the last couple of weeks, one of our network engineers has recently been accredited. Well, we recruited him as an apprentice 4 years ago. So we're able to take people on that journey of skills development and talent evolution. And I think the third one is we have offices in Doncaster, Dorking and Orpington as our key centres. We have other offices in the likes of Chingford and Northampton, but we have this diverse office base that we can recruit people into, which does mitigate any recruitment challenges. So we're able to manage that in a pretty effective way. Ian, do you want to add anything to that?
Basically, don't recruit in London, it's expensive. Do recruit in Doncaster, it's not so expensive.
And great loyal staff.
Yeah, I mean, bringing in the flexible benefits scheme to me is key, because in this environment, the discussion shouldn't simply be about money. There's other things in life. I know money's important, I'm not knocking that, right? But it's addressed the whole thing.
And don't forget, as part of our flexible benefits program, we are helping out in terms of cost of living with discount cards for major retailers. So that's all part of the package. So they're the questions that we have. Unless anyone's got any more. I think that's, just make sure we've got no more. No, I think that's it. So thank you very much for those questions. I think there is a facility to post questions after this, and we'll answer those in due course. But there you go, another one. So they're coming in thick and fast.
Okay, I'll take this one. Why do you think the share price is where it is? I don't like it, particularly when my family owns 17% of the business. I don't like it at all. I've got massive deja vu here, and it's interesting. We're actually sat 50 yards from the Bank of England at Singer's Capital Markets, and we've just spent an hour and a bit with all of the sales team here discussing the whole environment. Right, I have huge deja vu here. If we go back to 2008, what happened really was the market says, not so sure about small businesses. People like BP and Shell, they'll survive, not so sure about small ones. Let's mark them down. And then it goes next and says, the ones that's borrowed money, not so sure about them. But we've got to get through to people and say, hang on a minute. When you have very predictable cash generation like we do, and you've been doing it for the best part of 20 years, what you should be doing is fleeing to safety. And for those who remember what happened last time, from here on, the shares rocketed. I mean, I've already said to you that this morning that the analysts have said, based on your free cash flow, we think you're worth about £3.50. right? You know, whether it's right or not, I don't know. But the point is, this is the kind of place that you want to be, somewhere that's safe.
Okay, I think that's it. Hopefully that's answered many of the questions for the people on the call.
Yeah, Phil and Ian, thank you very much for that. I think you've addressed those questions you can from investors. And of course, the company will review all questions submitted today and will publish those responses on the Investor Meet Company platform. But just before redirecting investors to provide you with their feedback, which I know is particularly important to you both, Phil, could I just ask you for a few closing comments?
Yes, I mean, I think the key for me with these results, I think it just shows how we can perform. Don't forget that the 12-month period we're talking about here, there were some challenges. You know, we weren't through COVID. COVID was still around during this period. We've had the Russia-Ukraine conflict. We've had supply chain issues, and still the business has grown by 18%. Still, we've managed to increase our EBITDA margins by 21% to deliver a near £12 million result. So I think it just shows how we as a business are able to adapt and respond to the challenges and the opportunities that we face. And I'd like to think that warrants faith from our investors.
Thank you very much for updating investors today, Phil and Ian. Could I please ask investors not to close this session, as you'll now be automatically redirected to provide your feedback in order that the management team can better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of ADEPT Technology Group PLC, we'd like to thank you for attending today's presentation, and good afternoon to you all.
Thank you very much.